Hello, guys. This will be my fourth analysis now, and the stock came with my screener, VOXX International Corporation. I've been waiting for it for a long time. Ticker symbol VOXX, market cap of $89 million, so it is on the smaller side. It hit a peak of $27, and it's gotten absolutely wrecked. I mean, just in the past few days, it went from past few months, it went from $11 down to $4 now, because of the business is starting to decline, and now it's gone to that super cheap price where we want to kind of try to get in and get up on the next run. With this stock, I was doing analysis, but I only really have 30 minutes to film the videos because that's what I'm capped at. Um, and my other video, I already went through the balance sheet and everything, so I'm just going to go over some things. Because I already did the evaluation on it, and I have it on my other screen with Excel. But I'm just going to go through the balance sheet and explain, one by one, the different risks with these assets that I found. And the first thing is, well, cash equivalents is the same. Accounts receivables, I didn't find much risk with accounts receivables. 5% or 5 customers account for 28%, so there's not much for risk there. Um, if those customers do go bankrupt, I don't think there is many. And of course, inventory. Most of it was finished goods. $20 million was raw materials, so there's really nothing there. I just did a regular rate that you could liquidate it for. Receivables from vendors, obviously, I left it the same. This, I looked into it, and it's just, they're getting paid. Um, every, I think it's like 9 months or something. It's like a 9 month thing they got going on. It's not really a big deal. And prepaid expenses, I didn't really do anything with that. And the total current assets, I ended up with, after all the things I did, putting a regular rate, um, saying that if 20% of these accounts receivables don't get paid back, get 58 million, and then I did a 30% on the inventories. But you can see here the total discounted rate of current assets was 183 million. And I started going down here. Investment securities wasn't really much there. PP&E. Now, the only thing, and with this PP&E, it was land and stuff like that. But here, let's go into let's see exactly what it was. So, pretty plant. Let's go see, guys. Kind of just basically going through what I did in my last video. So that's why it's kind of all over the place because I've already did the research while I was on here. Let's see. So buildings of 45 million. We sold inventory, computer hardware, and software. Yeah, it's just regular stuff. I mean, I wonder what these buildings are. $45 million in buildings. But yeah, just a regular. One thing I found with, well, obviously, guys, when you always take goodwill off your, if you're doing like this type of valuation, because this company, I went on the earnings call and I read the earnings call, and what it sounds like is they're basically trying to say this year's a wash. Um, they're basically looking forward to 2025 because they're expecting sales to drop more this year, and things are not looking pretty. That's why it went from 11 to $4 now. So it's not looking good. And I took the goodwill off. They took off 64 million dollars off the balance sheet. And these intangibles, I don't know what these trademarks are, but if you dig deeper and find out what they are and see if they're actually worth $50 million, then that might be something to add to the valuation, because that could bump this up by a lot. And I could do that right now to see actually how much it would bump it up. So let's. Is that right? 33% upside. Yeah, it puts the valuation up to 139 million. So yeah, I mean, This stock, I mean, it would take a lot more digging, but I think that this stock needs to go down much lower in order for it to be a buy. I think these trademarks, like let's just say these are worth something, so 50 million. Um, yeah, there's not really much upside here. And I think, let's see, I saw something in their filings. I saw right here, or what was it? What's this? Okay, so this was the quarter that they just had. Well, since I have time, I guess we'll just read through it and see what's going on. So the automotive electronics segment sales fiscal fourth quarter with 32 as compared to 49 million. So huge decreases. Holy crap, 34% decreases. Yikes. So we're seeing large decreases. That's why this thing is just selling. I mean, it looks cheap on paper, but when you do the research, and there's a lot of goodwill. If there wasn't a lot of goodwill, this thing would be freaking. I mean, it would be great because if those goodwill were actually tangible assets, it would be actually worth something. But it doesn't really look like a good deal. But you could see here, man, this just things are just dropping as compared to 25. Oh my god, dude, this company is just absolutely going through. It's getting destroyed. Um, yeah, operating loss of $26 million, and I think they just got done with a lawsuit too. Which that was pretty huge. Actually, let me see that real quick. I'm kind of going all over the place here, guys, but I'm basically doing this live. They did do a lawsuit that I saw. What is this about? Uh, okay. I think that's the CEO. I'm pretty sure. Is it not? I think so. Fox. Okay. Orlando, Florida. Key acquired 5,000. All right, that's irrelevant. Okay. Let me see the lawsuit. That's the one thing I want to see. Because they don't even talk about it. Hold up. Okay. All right, never mind. I think it's an old lawsuit. I must have just read that while I was going around. But yeah, basically, from the looks of this company, so basically to sum up, this is gonna be a pretty quick video. I didn't really get to go through it with you guys, but because my last video was longer than expected. So, but just looking at this company and the balance sheet, I didn't really want to do discounted cash flow because, as you can see, the company's just in decline. And if you go to the earnings call and read it, they'll say that they're just basically looking to 2025, and they're already there. That's how bad things are at this company, and you could see the margins, sales are dropping, just everything. And looking at the balance sheet and everything, we could say that it's. I don't think it's a buy. I think there's too much risk involved. Uh, and can it go back up? You know, I mean, if this thing hits like, let's say $2 a share, $3, then I might actually think about buying it. But right now, at this price, $4, and they're still gonna expect to lose money going into the next upcoming quarters, you would have to put that into the evaluation too. No, I would not buy this company. All right, guys. Well, this is gonna be my fourth stock analysis. I actually got my first real viewer. So if you're watching this, guys, please like and subscribe. Um, and yeah, thank you for watching. If you made it to the end, and I will have more videos coming up. I'm trying to upload a video every day, because I have another stock I'm going to talk about, STRT, which I actually like a lot. So, all right, guys. Well, that'll do it. Have a great rest of your day if you made it to the end.